Alright, what is going on, guys? Today I just want to make a video regarding what I'm going to call it as filtering out the negatives, right? Because a lot of people come into trading and they end up failing naturally because it's actually a lot more difficult than you would think, but it's also a lot easier than you think as well. And I'm not sitting here as someone who's cracked the code that I know, that I'm super profitable because I'm not. I'm still figuring it out as well. But I feel like that's where I can actually provide value because I am still in that process of learning and kind of figuring out all of the hoops that we need to go through in order to become profitable, in order to to essentially adapt into a profitable mindset. So what I did was I kind of created this sheet that let me kind of look at all of my negative habits that contributed to my losses. I went across a few months of data and looked to see why I was losing. And it was pretty much because of very frequent things that I was doing consistently. So this video is going to be called Filtering Out the Negatives, and I'm just going to kind of explain some things here and just give you guys a little bit of sauce because it's easier than you'd think, but it's more difficult than you think, and it's because these are very difficult habits to actually keep in check. So I'm just going to put in the middle here, executing the setup. Okay, because executing the setup is very, very easy. It's just pattern recognition. You could teach any of your dopey friends how to execute a setup. I have mine at the bottom right corner here. If we have a liquidity sweep that's within a high time frame and efficiency, such as a 4 hour or an hourly, that's my manipulation. For the entry, I look for displacement through a high time frame inversion, typically the highest time frame one in that leg. And then I need a clear draw to enter. High time frame context is important, and SMT is also a bonus. But this is just a simple checklist I have, right? Simple pattern recognition, right? So obviously you don't want to be a pattern trader, but it's pretty easy to identify your setup when it shows up. It's just a matter of the probability of that given setup. So if all you did, the setup that I trade typically has a 60 to 70% win rate. Okay, it's a pretty popular model. I can go over that in a different video. I pretty much just trade, you know, liquidity reactions off liquidity pools, inversions. It's a really popular one. So it's very simple as well. And if all I did was execute my setup every time it showed me an A plus probability trade and I was good on my risk management, then I would be profitable because I'm extracting the probability from my model. But the issue is it's very difficult to get that 60 to 70% or whatever your win rate is in order to become profitable because we have all these negative habits that are installed in us. Okay? And these are things we all already know we shouldn't do. They're all pretty basic. But this is going to be helpful because, I kind of went through all my data. I would recommend you guys to go through your data as well. Just look at all your losses and see why you lost. That's why journaling is important. That's kind of the only reason it's important to actually go back and learn from your mistakes and get better and start tweaking things. So, obviously, the big one, over trading. Wow, my keyboard is slow. Holy fuck. Oh, the. Why is it so slow? This is such a big one, and I actually didn't do this for the longest time. I didn't even have an issue with it. I would take one trade, win or lose, I get off for the day. And I would be confused, like, why do people overtrade? Just step away. Just realize you lost. But then something happened to me. I went on vacation. I took some time off. I guess my mindset just shifted. I completely shifted, and I'm now over trading. I'm revenge trading. I'll take a shitty trade because I lost a trade, typically I'm finding that every single time I take that second trade after a loss, all I do is grow my losses. It's very rare I make it back. And that's not anything to do with the flaw of the model. That's because whether that first trade was a good loss or a bad loss or whatever it was, that second trade is now going to be based on the idea of making money. It's not really going to be very process focused. So it's a very common one. Um, and you'll find that that is likely a reason for why you are not profitable and you just keep losing. So that's something you need to check, right? You need to make sure that what I'm going to do to fix that is one trade a day. I'm risking $500. Whatever happens, happens. That is going to force me to only take high quality setups. It's going to keep me disciplined. And the issue with that is you can always break that rule, right? That's why trading is hard because no one's keeping you accountable. So if you're losing frequently, then overtrading is probably one of those things. And if you're just doing it again and again and again and again and again, then honestly, I mean, either you fix that like tomorrow or you pack it up and go do something else because like that's just one that is it's just disrespectful to yourself as a trader because no successful trader will overtrade. If they lose, they analyze that loss and they move on, right? There's no need to take another trade just for the sake of making money, right? That defeats the whole process and the whole point of actually trading, right? So I'm not sitting here telling you how to overcome all of these individually, but I do think that it's pretty easy to fix if you do create the rules around it. Okay. Again, easier said than done, but if you're losing and you find yourself over trading, then that is a leak in your system that you need to fix. Okay. The next one is directional anchoring. So this is one I learned pretty early on. And sometimes you go in the day with a bias, you're thinking long or short for whatever reason. And then if you're not careful, then you're gonna, if you're biased long, for example, you may not be able to see a perfect short setup because you're so directionally anchored towards long or short or whatever it is, right? So you need to be able to think, you need to be able to be very reactionary rather than attempting to predict the price because having a bias is good, right? You need to have an educated bias in order to give you somewhat of a direction of where price may want to go, where price may want to draw to, but it's important to not be married to that because then you'll find, you're longing into a place that you probably should have shorted, right? You're going to be so convinced on that long setup that you're going to look for, shitty longs. So it's important to be reactionary. And that is probably a more common one early on, but it is one that is worth noting because it's just it's kind of easy to do that. It's easy to get so caught up in a long bias or a short bias or whatever it is. So being able to train your brain to just be reactionary and not attempting to predict where price is going is going to help you out a lot. So, all of these aren't going to apply to you. These are just the specific ones for me. I find that they're very common, so I'd be surprised if none of these apply to you. If none of these apply to you, then you're probably a profitable trader, right? So that's kind of the point. If you don't do any of these negative habits, you're likely going to be in a what the hell? You're probably going to be in a better situation to be someone who is profitable, right? But this, with all of us who are unprofitable, it's because we have these negative habits. This next one is chasing missed trades. I actually did this today. Um, I knew we were short. I knew that we were going to go short because we completely went up into a 15-minute and an hourly and then completely reversed and closed below it. So that is perfect. We were also respecting a bearish 15-minute BPR on ES. So everything was pointing that we wanted to go lower. And I just didn't execute because I didn't really see a good entry model. And after missing that trade, I ended up taking such a premium short right when we swept liquidity. It was retarded. It was just retarded. And that stemmed from me missing that previous trade. I missed the trade, so I was like, I want to get in the market. I want to attempt to participate and make money rather than being left on the sidelines like an idiot. So, chasing missed trades is actually one of the biggest ones, and it's kind of difficult to overcome because it's a bit of ego as well. If you just need to be content that you either missed a trade for whatever reason. Maybe it wasn't really your model. Maybe you weren't paying close enough attention. Maybe you just weren't confident. And all of that is okay, right? Because every single day there's an opportunity. So you need to be able to be completely content with that because that is going to lead to overtrading. Okay, so that's one of the biggest ones, honestly. And the solution to that is just being completely content with, missing a trade and having a no trade day, right? No trade days. I think when we all accept that no trade days are good, then your win rate starts to increase. I knew that that happened for me when I got funded previously. Um, I had a lot of no trade days compared to the months where I'm doing shit. I almost trade every day. It's like nowadays that I'm doing shit right now. And it's like I almost find a way to lose because I'm just chasing missed trades, which leads me to over trading and just throws me into a stupid spiral where I'm, at my daily loss limit for the day. So that's the biggest one. And again, this is something that you guys have to go through yourselves to really figure out. And see how it applies to you. The next one, lazy analysis. This is like something you really shouldn't be doing early on because, if you're waking up and you just wake up at like 9:20, eat a muffin and a donut and then hop on the charts, like then you're never going to be profitable. You almost don't deserve to be profitable at that point, right? Because you need to at least be on the charts at least 15 minutes before. I do it at 30 minutes before, so I get on the charts with my coffee at like 9 o'clock. Chart out ES, chart out NQ, have my bias for the day, see conditions where price may react for long and short opportunities. And it's gonna happen where you see like, depending on your model, but for me, like I'm using fair value gaps. And if there's like a 15-minute fair value gap that I don't see, then that's crucial, right? That's crucial because that's an inefficiency where price is going to react from. So, and if I don't know that at the time, I may long into it. I may, go against it completely and just not even know it's there, which will just fuck me up. So that's huge. So, like I said, you really shouldn't be doing this later on in your career because it's just disappointing. It's just like you can't be lazy, right? You have to put in the work and at least chart the morning. That's ridiculous, right? It does happen from time to time though. It's very rare for me, um, because it's pretty fucking easy to do. But sometimes you may miss a 5 minute, right? You're so locked into the current trade, and maybe like you're so locked into an entry on the 2 minute, you don't even see a 5 minutes forming. That happens, but that is something that is gonna cause you to not extract your potential out of your model. So you need to make sure you're completely aware, focused, in tune with your model and how it reacts to the charts and the overall, how markets are moving, right? So you need to be able to put in the work and learn how to read the markets as well as prepare for the market that day. So that's really important. This next one, so this is not respecting the break-even point. And this has happened to me so many times. And what I find when I, watch profitable traders, they have their break-even points, and if it gets hit, it gets hit, right? Break-even points are such a crucial part of the trade, and it's difficult because a lot of times you'll find yourself setting a break-even point, and like the break-even point may be very close to your entry. Trade looks good, you hit the break-even point, and you just spike right down within 30 seconds. And that's annoying as fuck. Um, and that will lead you, let's say you get break even, and then we run to your TP, then you're gonna be mad. You just missed a perfectly good trade. What if you just didn't go break even? And then it's gonna lead you to not going break even in the future. You'll start over trading. So I think the best option is just to respect your break evens. Once you're break even, it puts you in such a good position because then you're in a risk-free trade. And a lot of the times these break even points, they're at invalidation points. So if your break even gets hit, that means that your trade has you know, a probability higher now that it's going to reverse. So if it hits an invalidation point and then it actually reverses and hits your break even, it will piss you off and go back up, but a lot of the times it'll save you from losing a lot of money. So that can lead to a spiral. That's why it's so important to actually stick to your break even points and learn how to put them in specific spots properly. Okay, because I know that was a big one for me. Because it's like it would hit my break even point, and then I would think, oh, maybe we'll come back and just tap it, and then and then we'll go back up, because that's happened to me so many times where it just taps it and goes back up. But it's also happened to me so many times where I don't set my break even where I should, and then I get completely reversed, and then I'm down on the day because I broke a rule, because I didn't execute the setup to the best of my ability, right? Because, like I said, break even point's at an invalidation point. Okay, so I don't want to take too much time on this video, but there's a few more here. This next one's pretty important, hesitating on good setups. This is very important, right? Because you need to be in tune. You can't hesitate, because if you hesitate on a setup and it's a good trade, then you're going to find yourself chasing that trade. And that is going to lead you to overtrading. So hesitating, oh my God, hesitating, holy fucking shit. Oh my God, okay, whatever. Hopefully that's spelled correctly. And hesitating on your setup pretty much just comes from being confident in yourself as a trader and your overall model. So you can't hesitate on setups. That is going to lead you down a path, like I said, of chasing missed trades, over trading. It's just, you need to be in tune with yourself and understand the concept of trading, which is just the simple fact of you extracting probability. There's no need to hesitate. If you realize this is your setup and it's A plus, there's zero need to hesitate, because regardless if it's a win or lose, you don't know if it'll be a part of the 60% of wins or 40% of losses. But you can't just try and avoid the 40% of losses, right? You just have to go in and essentially let the probability play out. And it's that simple. Because yes, you will lose. You may wish you hesitated. And hesitating is good. If you feel off about something, if the setup doesn't look good, if there's maybe, the high time frame doesn't really align or whatever, then fair enough, hesitate, right? That can be good. But it's a very fine line between the positive and negative hesitation, right? And like I said, I'm not a professional. This is just my experience. These are all the things that have contributed to my losses. Hesitating on good setups is one of them. So if it's not for you and you execute perfectly every time, then just ignore that one. But I know that we all have that issue. And it stems from confidence. I am confident in my model, but sometimes I'm not confident in myself as a trader. I don't want to lose money, and then I just hesitate. So it is what it is, but you do need to fix that if you do want to become profitable. So this next one, not following rules, basic, but the most important, you need to have rules in place. My rules, if there's no manipulation, if there's no draw on liquidity, if there's no entry model, then I don't trade. Okay, I need all of those. And that can be difficult because if we have really strong manipulation with a clear draw, but there's no entry, then I simply can't take the trade, right? And that goes with discretion. If you're a very knowledgeable and experienced trader, then you may break that rule. But to be honest, you need to have rules and you need to stick to them. That's all about discipline as well because nobody's keeping you accountable. If you don't follow your rules, no one gives a shit. You'll just lose money over time. Your rules are put in place to allow you to extract the probability and not let your emotions get in the way. My keyboard is shit. It's actually a pretty good keyboard, but it's like not registering. Brother. There's two T's. You can hear me clicking this, like. Holy fuck. This is a big one too, actually. This is huge. Letting emotions make the next move. This is probably the biggest one. And this is literally probably a whole other video on itself. Oh my god. Perfect. And a lot of the times, because how you have to, it's interesting because to become a good trader, I find that it's necessary to understand how your brain works. And the limbic system, which is our emotional brain, and the prefrontal cortex, which is our logical brain, good traders will think logically about a setup and then enter. Shit traders, unprofitable traders, myself, we make emotional decisions, right? We missed a trade, so now we're going to enter on a lower quality setup, and then we're going to lose, and then we're going to get pissed off about it and feel like, I need to make that money back. I want to be green on the day, so we'll then overtrade. And then the next day, you're going to start to hesitate on really good setups because, well, fuck, I just made a shitty trade yesterday. I don't want to have another shitty trade today. That just leads to low confidence, right? So it's this diagram is very important because it all connects. But again, with the brain aspect, you need to be able to learn how to control your emotions. Your emotions are very strong, right? We have more negative emotions than positive emotions, especially in trading. And this just goes back to how our brain evolved. It did not evolve to handle the emotional stress of the markets. Okay. And that, I'm not going to go into that. That's a whole other video on itself. But you need to realize when you're making emotional decisions at that time. For me, my heart actually starts racing. So that's how I know. Okay. Sometimes it doesn't. And I just make stupid emotional decisions anyway. So you need to learn how to control your own emotions and how to reel yourself back in and actually think logically about that next move. Because it's almost like a drug. We all know this when you take stupid fucking trades in the market and then you step back after, you're like, what the fuck did I just do? What the fuck just happened? Because you know you shouldn't be doing those things, but you end up doing them anyway every single day. And that's because your emotional brain takes over. And again, it's a whole nother video, but the science behind it is your brain is actually trying to protect you. You lose money, so you got to make it back. So anyway, just keeping your emotions in check, realizing that your brain is trying to protect you by making these emotional decisions, but really that's not what you should be doing. So this diagram, if you take out all of these negative habits, then and you just execute the setup, then you will most likely be profitable over time. You're not going to win every single day, but the days you lose will be beneficial so you can actually learn from them, right? You need to be able to get your negative habits in check, right? Because that's what being profitable is. You don't have any of these negative habits that you do consistently. You just execute the setup, okay? Again, go back in your data and look to see which ones affect you. If there's other ones that affect you that I don't have here, then make your own diagram and post this on your wall. Because if you overtrade every day and you just keep doing it, then what are you doing? Seriously. If you continue to hesitate on good setups, like figure out why you're doing that. What is the purpose? Like, well, not the purpose, but just find the stem of where that comes from and then slowly fix it. Just don't do it again. The definition of insanity is doing the exact same thing over and over and over again. If you lazy analysis, learn how to read the charts and put in the work. Right? So this is important. I think this will help a lot of people actually get to that next step psychologically and just become aware of these negative habits that affect you. And this is like it's kind of like whack-a-mole. You'll fix a couple, others will pop up, and it's a real process to be able to fix all of these and take them all away and just execute the setup. But that's the only way to becoming profitable. Okay. So I hope this video helps people. I hope I didn't make it too long. Um, but yeah, if anybody has questions, feel free to hit me up. This is my first YouTube video. I want to post a lot of other YouTube videos as well, and just create educational content, kind of like showing where I'm at in my journey as well. And I'm still trying to really crack this diagram as well. So let me know if you have any suggestions. Let me know your experience and what you thought. All right, so until the next time.